Ladies and gentlemen, this week matters more than most because we are reaching a point where shorter time frame signals are starting to align with much bigger structural levels. And that's exactly why the weekly expected move zones are so important to understand right now. Every single Sunday, we put out those 68% probability ranges, and they are not predictions. They are frameworks that help us react instead of guess, especially when volatility begins to rise. We've already gone through the daily, weekly, and monthly charts, so today we're narrowing our focus to what the market is doing right now. Because you may have noticed the question on the thumbnail, is it time? And what that really means is whether we're approaching a point where markets either trap late buyers or finally give in to a larger pullback. Before diving straight into SPY and QQQ, it's worth stepping back and looking at gold, because gold has been dominating conversations lately with non-stop upside momentum, and when everyone suddenly agrees on a trade, that's when we need to slow down and analyze structure. On the GLD chart, we do see meaningful divergence forming on both the MACD and RSI, which tells us that momentum is becoming stretched, but that alone does not signal a top. Strong trends often resolve divergence through time, not price, by moving sideways or pulling back just enough to reset indicators before continuing higher. The weekly chart reinforces this idea, showing that gold remains in a very healthy uptrend, and unless we start seeing confirmed weekly divergence accompanied by lower highs, the larger bullish structure is still intact. This is why shorting strength in a strong trend is so dangerous. You don't know if the market will dip briefly, move sideways for weeks, or push higher one more time before any meaningful correction takes place. That same lesson applies to the broader market right now, where crash narratives are everywhere and comparisons to late-year sell-offs are being thrown around without context. Yes, the daily structure looks similar to past topping phases, but the weekly indicators tell a very different story this time. Back then, we had multiple confirmed divergences stacking up across time frames. Right now, we simply don't have that recipe yet. That doesn't mean downside is off the table. It means the market still has to prove it, and that proof comes from the shorter time frames. If the 2-hour charts are able to curl back up into positive territory, the probability remains high that we test the weekly expected move to the upside. If instead we see continued selling, followed by a bounce and a failure near key levels, then the bearish case becomes valid and actionable. Until one of those scenarios confirms, patience is not just a virtue. It's a strategy. Markets don't move because people are scared or excited. They move when structure breaks or holds. And right now the charts are telling us to stay flexible, respect the levels that hand, and let the market show its hand before committing.